Good morning, good evening, good afternoon to wherever you are in the world. Welcome back to another episode of the Coffee Hour. We have a ton of news to go over, a ton of news. So I actually had to cut down a lot of the stuff that I wanted to cover in order to kind of keep the stream, at least to an hour. I think the stream might actually go on a little bit longer. Thank God it's Friday, okay? Thank God it's Friday, TGIF. Congrats to everybody who made it one more week through this very crazy market. It seems like every day just something exciting is happening, and we just can't stop it. Right? We just can't stop it from happening. Just too much. We're winning too much. We are winning too much. I hope you guys are tired of all the winning. Like always, I have to really prep this thing real quick. Hold on 1 second, because I have to post this on X. Winning too much. We are winning too much. I hope you guys are tired of all the winning. Like always, let's stop that. There we go. Yeah, I have to post this on X manually because StreamYard will not allow me to post it. And when I'm setting up, I can't post a stream that's not happening on X, unfortunately. Not like YouTube where I could just schedule it, and I get everything right there. So I actually have to post this manually, which is kind of a bummer, but hey, it is what it is. Let's see. TGIF. Anthropic. You know what? Let me do this real fast. Let me do this real fast. This is so annoying. Okay, there we go. Okay, guys. So like I said, tons of stuff we got to go over. I already see we got someone in the chat. We got JVMZ. What's up, man? Glad you made it. We got Sean Livey in the chat. Hey, welcome. Let's see. And I'm not muted this time. So, hey, you know what? We're already off to a good start. I'm not muted. So, Super Straight Guy says GIF. Maybe it's good it's Friday, or are you talking about the new ETF from Rex Shares? That's coming out. All right, guys. Let's get into it. We're going to be covering a little bit of macro news. We're going to be talking about MSTR, everyone's favorite hated stock, all right? Everyone's favorite hated company. We're going to be talking about blocks, and not blocks the ETF, actually block the financial app. All right. XYZ is the ticker. We're going to be talking about Anthropic. Now, I have to kind of preface this stream. All right. There's going to be a little bit of politics in this. All right. Because when it comes to Anthropic, there was definitely a lot of politics involved. And I know it might trigger some people. Some people might have some very strong opinions. I'm just going to report the news as I see it. I definitely think it is very important we cover this because it's definitely lending itself to the whole AI trade, right? So I definitely want to cover this. But of course, this is a politics-free channel, and we try to keep the politics red, blue, Democrat, Republican, MAGA, woke. We keep all that stuff outside of this channel. All right. Okay, guys, let's get into it, and appreciate you guys all again for joining me on this beautiful Friday. All right. So let's look at the heat map. Not too bad. All right. I'm actually seeing way more green than red, at least on this side, at least on the right side of the screen. All right. We still see that not Microsoft, but that software is still, getting sold off. Technology is still continuing to get sold off. We had Palantir actually in the green. That's nice. Oracle continues to get slammed. Microsoft, Apple, Nvidia. Nvidia actually had a really, really big pullback. I wish I picked up some more shares of NVDW. I'm going to probably wait till Monday to add to my position. Because for me, Nvidia, at least my position, is closer to a negative 10%. I'm like, yes, that's exactly what I was waiting for. I said this before. It's closer to that negative 10% that I want to see. So I might actually pick up some shares. Let's see. We have financial services doing its thing. Again, just software continuing to get hammered. All right. But the rotation is still going on. We still have consumer defensive doing well. Industrials are still doing well. Let's see. We have healthcare doing really well. Actually, healthcare doing really well. Okay. And utilities, of course, real assets doing good. We have energy doing good. Real estate. Looks like there's some green in the real estate sector. And that's partly due, in my opinion, to the 10-year treasury coming down. So for the 10-year treasury, we are actually down sub 4% on the 10-year treasury. And the 10-year treasury does influence commercial real estate's mortgage rates, right? Because typically for commercial real estate, you're not going to get like a 30-year, FHA loan, right? You're not going to get a 30-year loan, because the banks that are offering these loans to commercial real estate, they want to, lend out the money, make as much interest as possible, and then get their money, out. So they usually do like 5-year terms, for most of their mortgages, right? Okay, cool. So let's take a look at the S&P 500. We see that we are just slightly down, all right? Negative 43 basis points for the day. We ended this week in the red by 32 basis points, okay? Year to date, it's barely in the green. Again, here's that choppiness that we all know and love. We keep seeing it every other day. NVIDIA earnings came out this week. They did really well on earnings, and the market pumped only for the market to sell off, right? I mean, we've seen this. We know this already. I mean, this should not be a shock to anybody. But we did see a pretty big or decent drop, I would say, a pretty decent drop for the broader market. All right, for the expanded tech software ETF, IGV, and this is what I'm using as kind of like a bellwether for risk assets. But we see that the software over the last 5 days has actually been up almost 3%. Not bad. All right. Just today, they had a slight sell off, 1.25%. Year to date, they're still down by a substantial amount of 20%. All right. So hopefully, we'll see this start to spike back up again from its former high. We see that it's down about 30%. Yeah, still down about 30%. It was down closer to 35% not too long ago. All right. I mean, you can even take the October timeframe, because October really is when we started to see the sell off for a lot of this stuff, right? A lot of the tech companies, even crypto. That's when crypto 1010. May we never forget, 1010 was the liquidation event. 1,000 or more than that. It was like, what's that Star Wars meme? It's like it's Obi-Wan Kenobi. He's saying, I just heard millions of voices go silent. That's pretty much what happened on 1010 for Bitcoin and the mass liquidations that occurred, right? And people are pointing the fingers now. They're saying it's Binance. They're saying it's Jane Street. They're saying a whole bunch of stuff. There's still no conclusive evidence of who it was. And a lot of it is being summarized as it was a technical glitch somewhere that causes this ripple effect across all the exchanges, which started the mass liquidations of Bitcoin, right? So a lot of people, or crypto in general, right? Not just Bitcoin. But anyways, so I like to start at least from October, that time frame, to really get a good trend, I suppose, right? So IGV is still down by a substantial amount, okay? We also have gold doing really well. We're going to cover some gold and some rare earth news towards the end of the stream. All right, I offloaded that towards the end, but gold is doing well, all right? Up 1.31%. Over the last 5 days, up 1.91%. And then year to date, still one of the best performing assets year to date. We have the iShares Silver Trust up 5.64%. And again, I'm beating myself up because I am really considering dropping a substantial amount into a 2x silver position, right? I'm trying so hard not to, because I think, of course, when I buy it, it's going to go around, it's going to go down, right? But I am really considering it. I really think silver is going to have its rebound back up to these levels, right? It's going to be a slow grind up, and we can already kind of see it happening. Just over the last 2 weeks, we already see it's up 28%. And if you held a 2x ETF like AGQ, you'd already be up 56%, right? if you could stand that volatility. So I don't know, guys. I'm still thinking about it. I want to be careful. I don't want to YOLO or degen my money. But I mean, I'm bullish on silver. I really am bullish on silver. I hold a silver ETF SIL from Global X for the silver miners. And I mean, I'm bullish on silver. The fundamentals are there, right? Not enough silver to go around, a large demand for silver. Anyways, let me get off that. Bitcoin, not doing much, right? It had a little peak up. People were all excited. I was excited too. And then, you had these large jumps this week, and then it, of course, sold off, right? So whoever started this right here was probably a long position, and then, they got out, right? So we'll see if Bitcoin, again, we're waiting for it to break above 70. So, or really 70, 72, we're waiting for that to break above. And then we can see a continuation to, the 80s or mid 80s. If it doesn't, and if it gets rejected at 70, I predict we're going to probably head lower to like the 55, 58,000 range for Bitcoin. Again, that's not no technical analysis. That's not charting or anything like that. I don't have any of those fancy tools. It's kind of just what I'm seeing out there and kind of what I'm believing as well. So we will see what happens there. Again, just hold on for dear life. Okay. Let's get into the news section since we covered the broader market. Actually, one last piece of one last thing I just want to cover is EWY ETF. Okay, emerging market, South Korea. Well, I guess it's not an emerging market, or maybe it is. I don't know. But South Korea doing really well. Again, we covered this ETF not too long ago, and the two top holdings in this ETF. Right, because it's had a blowout year, right? It's had a blowout year to date. It's already up 50%. Over the last year, it's up 170%. All right, but the two stocks that are really leading this ETF is Samsung Electronics and SK Hynix. All right, these are memory producers. You guys know who Samsung is, right? TVs, cell phones, that type of deal. SK Hynix, Samsung, and Micron MU. These three companies basically cornered the market for DRAM. Okay, so you guys can look up even MU, and you'll see that MU stock has just been going crazy, right? They do have, little drawdowns here and there, but even over the last year, up 350%. Year to date, up 30%. Okay, so that fundamental is still there. Micron is building out a huge fab or manufacturing base. I forget which state, but they are building in the United States. They're spending all the money to build this manufacturing base there. So a lot of money is still going into it. All of their orders are pretty much paid for the full year. I mean, they're already booked, right? Let's see. So from Sean, MU I own, up for me, getting rich. That's what I'm talking about. Let's go. Okay. Let's move on to our first big piece of news, and this is more of a macro news, but core wholesale prices up 0.8% in January, much more than expected. This was the PPI report that came out, and this is pretty much why the market sold off, all right? So, the net is that PPI was hotter than expected, and the market sold off, right? PPI is a gauge for inflation from a seller's point of view. Okay, so we can see that it's up for them. So it's costing more to produce, and that's not good, right? Especially for this whole inflation story. If we see inflation coming back this year, right, that's not really gonna inspire a lot of confidence for the Fed to cut rates. Right, the Fed is focused on its dual mandate, right? Price stability, employment, okay? And the labor market has been showing cracks. As a matter of fact, we're going to get into an article later where AI is disrupting labor, right? This is a really big case study where AI has disrupted a company, okay? A technology company, okay? So we'll cover that a little later. But real fast, I just want to cover this. All right, the report comes as President Donald Trump has repeatedly insisted that inflation has been tamed. Pipeline pressures, as indicated by the PPI figures, could keep the Fed cautious as it weighs its next move on interest rates. Markets largely expect the Fed to stay on the sidelines until the summer, though Trump and other White House officials have pushed for lower rates. Economists have worried that Trump's tariffs will push inflation higher, though Fed officials largely expect the impact to be temporary. There was some evidence of tariffs in the PPI data, with indexes for apparel and other goods such as intermediate components moving higher. Trump lost a key Supreme Court ruling that overturned his move to use the emergency measures to implement the tariffs known as IEEPA. All right. However, the president cited other authorities that will allow him to implement the duties anyways. One of those is, I think 121 is Authority 121 or something like that. I can't memorize all that stuff, but yeah, again, he's still going to push to have the tariff plan implemented one way or the other. So now we're going to have to wait another year for this to get battled out in the courts. And there's still that lingering refund at the very top, okay, of all of this, that refund to companies that the government will have to pay back. Potentially, maybe you just won't pay it back. I have no idea. The lawsuits are definitely going to pile up. UBS. All right. This was kind of shocking because, again, we had the working investor. Shout out to the working investor if you're listening. But he again made the case for international exposure, right? And me being, anti-international, I just don't want any exposure to international. I'm starting to think maybe I should have some damn freaking exposure to international. I'm still looking into it. All right, I'm still deciding how I want to approach this. Because again, like if I was to go all in on like the Korea ETF, EWY, I mean, it's already at its peak, right? And I'm worried about buying at the top. And there's only 2 stocks that are really driving that entire ETF. So again, kind of worrisome. But there is a good case, and there's been plenty of channels out there, and I'm not talking high yield ETFs, but there's been plenty of channels out there. The Nomad Capitalist, I think, is the channel. He made the case to go into international about a year and a half ago, if I recall. He's been pumping up international markets for a while, but of course, I mean, that's his bread and butter, right? Is moving abroad and then structuring yourself with LLCs and bank accounts and visas and all that stuff. So he would make the case for international stocks, in my opinion. So I really didn't take it all right. I really wasn't paying attention to what he had to say, only for that to obviously come back with a vengeance and bite me in the bum. But yes, UBS cuts U.S. equities to benchmark boosts emerging markets on dollar and growth outlook. All right. The dollar is obviously weak, and the Trump administration wants a weak dollar in order to sell American goods to other countries, right? That makes it just easier for other countries to buy U.S. products. So therefore, that's why he wants a weak U.S. dollar. But UBS has downgraded U.S. equities to benchmark in a fully invested global portfolio, citing stretched valuations, fading buyback support, and rising risks from a weaker dollar, while reiterating a high conviction overweight on emerging markets. The bank also warned that a weaker dollar may weigh on unhedged U.S. returns, noting that currency losses have recently outweighed the earnings uplift typically associated with dollar depreciation. All right. By contrast, emerging markets are seen as benefiting from accelerating global growth, cheaper valuations, and potential dollar weakness. UBS said emerging market equities offer higher operational leverage, supportive currency dynamics, and improving earnings breadth, reinforcing its overweight stance. So that is coming from UBS. All right. We've covered UBS quite a few times on this channel. They've put out their own price targets and things like that. I think it's worth noting. Maybe one stream, what I'll do is try to find the white paper, because there's a couple of white papers out there from Fidelity, from Vanguard, from Schwab, basically making the case for international exposure. So maybe one day on a stream, we'll just cover one of those. It'll be the international stream or something, right? Maybe we'll bring on a guest or something. Maybe we'll bring the working investor back onto the channel, and he can kind of help drive that point home. Excuse me. So anyways, I thought that was interesting. Again, my portfolio is X international. So I might have to start thinking about something international. And there's some really good ETFs out there. I know one of the fan favorites is IDVO from Amplify. We've covered Amplify and the CEO on this channel, through interviews on CNBC. And I don't know, maybe it's time I make that change, right? Make that swap. I've actually removed a lot of tech from my portfolio, from my own portfolio. I trimmed VGT as one of the ETFs that I did, take away from. I'm still expecting a really big drawdown. I don't know when it's going to happen. I'm expecting it in the first half of 2026. If that drawdown doesn't come, I don't know what I'm going to do, right? And I have to have this portfolio continuing to generate some type of return, some type of not only distribution, right, from a high yield ETF or whatever, but I mean, just, from, just general appreciation, right? So far, I've been leaning more so on the metals, right? Silver, gold, just to name a few, and a couple of miners in there. But I've been leaning more towards that, because I still really do believe that there is a super cycle, a commodity super cycle coming. So maybe it does make sense to have some type of international exposure with that to complement, the portfolio to get appreciation. So we'll see. Let me just check this real quick. So Serial Bagger says, take a look at this Advances International Small Cap Value ETF. All right, I'll come back to this towards the end of the stream. And then we have from Sean, IDVO, NIHI from Neos, IDVO is from Amplify, are the two I have. Plus, I picked my individual stocks from overseas. I have the good ones. Nice. I got the good ones. Honestly, man, BYD, I wish I bought BYD of all the Chinese stocks out there, because I drive a Chinese electric vehicle. And they really do give Tesla a run for their money. BYD, in my opinion, is definitely something to look at. And I don't mean just from a stock perspective. I mean from a car perspective, right? What they actually offer against something like a Tesla, because you'd be pleasantly surprised. And I know BYD is not offered in the United States, right? They really don't, like, the United States doesn't really have Chinese cars. They have more so like Japanese cars. And of course, American made cars. But yeah, you'll seldomly find anything from China in America. But man, some of those cars, they're getting real good. Anyways, let's get back on track. All right, so we got some more market news. We're going to cover something from Dan Ives and from Tom Lee. So let's listen from Tom Lee first. All right, so this is Tom Lee with Fundstrat.
You're going to have on the markets, Tom. It just shows you that AI is everywhere.
And real quick, he's talking about March, a turnaround from March. Okay, so for the broader market, the stock markets. So let's listen in. All right, I haven't watched any of these clips. All these clips are brand new. Like I said at the beginning of the stream, I was going through all my news sources. I actually took out a bunch of stuff because I couldn't cover. I can't cover everything, right? Which is a bummer, because as I'm going through that stuff, it's taking away from my ability to watch the CNBC clips. All right, so let's listen in on what Tom Lee has to say about March.
And it's in the conversation everywhere, within governments, within this market. Market doesn't seem to know what to do with this trade from here. It's just nervous all the way across the board.
Yeah, that's right, Scott. I mean, we know AI is improving at an exponential rate. There's a lot of spending associated with AI. And of course, now we're uncertain, like the path that it takes, whether or not it's actually a net positive for the economy. I think investors are losing sight of the bigger picture, which is that when it comes to the global implications of AI, it's really just the US and possibly China as the two real creators and beneficiaries of AI. And I think ultimately that also means that the S&P 500 should be a net beneficiary. So I think a lot of the angst we've seen this month, and a lot of the research, and a lot of the people pointing to how there's downside scenarios for AI. I mean, a lot of that is just guesses, but to me, I think it's also overly pessimistic.
What do you make of NVIDIA's tough week? You couldn't ask for a better earnings report, one would think, and yet the stock's been miserable.
Yeah, I mean, I'm disappointed to see the stock not stronger off those results. I mean, how many companies can get 60 billion of revenues, guide to 70 billion of revenues? And that's, up over 70% year over year and 100% growth. The PE of NVIDIA now is at 19 times forward. So I think this harkens back to many times where NVIDIA's price consolidated for periods of time and then it re-rated. I think this is what it's going to prove to be. I don't think the visibility is any lower. And does it make sense that NVIDIA should trade now at half the PE multiple of a lot of consumer staples like Costco, which trades at almost 50 times earnings?
Tom, how are you thinking about credit, the way that, spreads have widened, the financials are trading terribly, not even to mention the private equity and private credit names. Some see broader risks out there. What about you?
Yeah, private credit has been percolating as a problem for some time. We got some signs last year about this, and I do think it does affect those who are invested in private credit. It does also argue the Fed needs to be thinking a lot more about where interest rate policy is. I think the good news is today, after the PPI report, the number of implied Fed cuts actually increased this year from 2.1 to 2.4.
I mean, yes, rates are down, spreads have widened. It's, people are talking about growth scare, that we've reached that realm of market nervousness. Is that what this is in part today?
I mean, part of me, Scott, just thinks this has just been a tough February, and it makes people feel like it's a bear market, and we're down 1% for the month. I think March is going to be a turnaround month for the better. I don't think the economy's slowing. In fact, if you look at things like rejection rates for trucking, it actually points to the economy probably accelerating. So I think if there is a growth scare, it's really just more of a risk premium than it is companies actually delivering news that would scare you about the economy.
Tom, you warned us about this. I mean, you told us it wasn't going to be a linear year, that we were going to maybe get off to a good start, have some rough patches and then, pick things up again. We'll see if we are in that maybe a little bit earlier than you thought. It's obviously
Dang, man, I suck. Oh my god, I'm just talking nonsense for a whole hour. Jesus Christ. All right, guys. I'm sorry. Look at this right here. This is now amateur hour. Oh my god. Dang, guys, I suck. All right. I got to stop muting. Cuz I mute whenever I talk or whenever I have the videos play. Because I don't want there to be an echo. Now I'm just not going to freaking mute from now on. Damn, this is terrible. This is terrible, man. Amateur hour, absolute amateur hour. You're absolutely right. Oh my God. Okay. All right. Let me go back and just really quickly summarize what I was talking about. Okay. So anyways, Tom Lee was talking about, February being just a really crappy month, really, just shitty. Everyone's been dealing with the volatility, right? We see that from the S&P 500. Okay, we saw that it's pretty much year to date trading flat, right? Nothing going on here, right? We're seeing these dips and swings, and I was relating that to something like the South Korean ETF EWY, right, where we're seeing year to date 48%, and this just leads on to more of credit for UBS, saying that U.S. equities are no longer loved, right? And that international really should be looked at, some type of international exposure. And with Tom Lee continuing to talk, of it being just a really crappy month, a really crappy February, I brought up the State Street tracker. Okay, brought up State Street. And we could see the rotation, right? We continue to see the rotation. We see just over the last day that industrials, financials doing really well. Communication services is starting to get a little bit of a bump. But over the last 5 days, communication services is actually going up. But over the last month, we see who the winners are, right? Energy, utilities, industrials, et cetera. So I just wanted to point that out because, again, this is still a good tool to look at to see where the money is going, where investors are putting their money. And we saw that a lot of money was rotating out of information tech, information tech, communication services, and was actually rotating into energy, industrials, materials, and healthcare. All right. Okay. Guys, I am so sorry. All right. I apologize again. I'm not going to mute anymore. I think that has done me more harm on this channel than anything else. I'm reading the comments. I'm like, what are you guys talking about? And I'm like, oh my God, I see the mute button. I am so sorry, guys. I'm over here just like yapping up a storm. You guys can't even hear me. Okay, anyway, I appreciate the 34 viewers on X and the 22 viewers on YouTube. All right, be sure to hit that like button. I would appreciate it. All right, get this channel a little more exposure. Okay, guys, let's get into something from Dan Ives. Dan Ives, I like to follow him. He's from Wedbush Securities. He runs the IVES ETF, and he's been bullish on the AI trade for quite a while, right? He's actually the person I got the idea from, or the analogy when you look into a data center, you're looking for the second, third, fourth, fifth derivatives, right? The things that go into a data center. You're going to have the software. You're going to have the things like Microsoft, Google, Microsoft Azure, Google, Google's whatever their stack, their cloud software is called, I forget. But you also have AWS, Amazon Web Services, right? You have CoreWeave building out massive data centers. So when you're thinking about these, second, third, fourth, fifth derivatives, that's what goes into the data center. You're going to have the chips, you're going to have the racks, you're going to have the servers, you're going to have not only that, you're going to have the power, right, underneath the data center. And then under that, right, you start to get into those fifth or fourth or fifth derivatives. What metals go into that data center? All right. So all that stuff is very important. So let's listen in on this. All right.
It's been NVIDIA's no good, very bad week, despite an earnings report that wowed the street once again, including you personally and the way you covered this company. Couldn't throw any stones at this report yet. What gives with this bad week for this stock, and what does it mean then for how it might trade in the month ahead?
Yeah, Scott, I mean, it's a stunner the way that this thing's traded here. I'd expect this is a stock that would actually be 210, 215. Look, this is, if you look from a report perspective, there's no way they could have done better. I mean, the 78 billion for next quarter, the 500 billion plus in terms of the pipeline, we see with Blackwell and Rubin. I just think, in my opinion, this is as nervous as I've seen tech investors going back to last April. And we're in a sort of AI ghost narrative where good is bad, bad is worse. But I take a step back. I look at Openai with the funding round, check. You look at the data center revenue from NVIDIA, check. I think software is going to start to bottom here, especially after the Anthropic event, Salesforce, ServiceNow, and others. So this is a turbulent period, but our thesis is unchanged. I'd say more bullish relative to the overall thesis.
Wow. I mean, I'll get to software in a minute because the prior few days had looked pretty good. Some people trying to call a bottom. Today, not so much. But I'll come back to that. The funding round that you and Kate Rooney were just talking about, I think immediately when I see the announcement, the fallout for a stock like Microsoft, which is not trading well, which hasn't traded well. What is the fallout?
Look, I mean, Microsoft, I think is probably the most disconnected stock that I've seen in the last few years relative to where it's trading. And obviously the view, like, Amazon, others catching up. It's no longer just them in terms of that OpenAI relationship, as well as what we see on the data center side. But look, my view is 10% of Azure customers have gone down the AI path. So as you actually look at this, it's going to be an incremental 25, 30 billion of revenue from Microsoft. It's just right now, it's a do not enter zone in terms of the view from investors. You're seeing them, you're really head for the elevators in the name. But Scott, as I've talked about, like, this is one of our top picks for the year, multiple years, because of where they play on enterprise, what Nadella is doing. In my view, like, OpenAI was essentially the training wheels for now what I think they're going to be able to do themselves. And I think numbers are significantly underestimated. It's a massive head scratcher at this sub 400.
Scratching your head too about Amazon. I mean, the stock barely getting a bump today. It's down more than 9% year to date. They seem to be, elbowing their way more heavily towards the front of the line of the arms race.
Yeah, look, I mean, Amazon's another one. Like, if you look into some of the parts, you could say it's the most attractive it's been in probably the last 4 or 5 years. Jassy, everything he's doing, even on the OpenAI investment, you look at what I view from a data center perspective and acceleration we'll see in the next few years. I just think right now we are seeing a situation where all these stocks are getting thrown out. There's a view, obviously, Anthropic, Claude, as we've talked about, in terms of the worries that's happening here in terms of the entrenched players. But our view is these are the times to look at who are the winners on chips, NVIDIA, AMD, Micron, the winners on the hyperscaler side, Microsoft, Amazon, and others. And then you look what's happening in software. And I think we're going to look back, as brutal as this week's been, a horror show in terms of the nervousness. These will be the opportunities, given we follow the CapEx spending and ultimately where the spending is on the enterprise and AI. And that it will dictate where these stocks go over the next 12, 18, 24 months.
Okay, I'm not on mute this time. All right, you guys aren't going to get me this time. All right, I'm not on mute. So anyways, those were Dan Ives' thoughts on software. I wish I could offer more insight, but I mean, I think he covered it pretty much, and I was going through the comments. Man, you guys, I really wish someone told me I was on mute. No, I'm just kidding. All right, guys. So moving on from that. All right, this is where we get kind of into the politics of all of this. Okay, we're about to hop into the politics world a bit because huge news with Anthropic. All right, not just Anthropic, but also OpenAI. All right, OpenAI has thrown their hat in the ring. So let's go through this article. This does get kind of spicy, and I'll just share some of my own commentary, my own thoughts on this. But I'm going to try to be as objective as possible because, again, this stuff can get really, really sensitive, really, really personal. Okay, so anyways, the Trump administration blacklisted Anthropic as AI firm refuses Pentagon demands. And we covered this just a few days ago. Basically, Anthropic does not want their software to be used for unlawful purposes, things like surveillance and also things like unmanned weapons, right? Drone warfare, like we're seeing. And honestly, AI is already being used for drone warfare anyways. It's being used in the battlefields of Ukraine and Russia. So we see that already happening. AI is seeping into everything. All right. But anyways, Anthropic sent a letter to the Department of War basically saying, hey, we don't want that. We don't want our software to be used. It is the only software, Anthropic, that is the only software, the only AI, I should say, that is allowed on the classified networks for the Department of War, for the military, right? For the DoD. So Anthropic is obviously not happy, but they also had a $200 million contract that was just signed back in July. I believe it was back in July. So this is a big hit, right? This is a big deal. You have an AI company that is voicing their concerns about mass surveillance and about their software being used for warfare, right? For unmanned warfare. So real quick, we'll just go through the summary. President Donald Trump ordered U.S. government agencies to immediately cease using technology from the AI company called Anthropic. The AI startup faces pressure by the Department of Defense, or the Defense Department, to comply with demands that it can use the company's technology without restrictions sought by Anthropic. Defense Secretary Pete Hegseth, soon after Trump's order, said he was ordering the Pentagon to designate Anthropic a supply chain risk to national security. That's usually a designation only given to foreign companies, foreign adversaries. So this is a very rare event that the Department of War, Department of Defense, whatever you want to call them, would assign that to a U.S. based company, especially a company like Anthropic, which is one of the major AI companies leading this charge, right? Leading this charge for the United States in this AI Cold War, rivalry with China. After the AI startup refused to comply with demands about the use of its technology. So I'm just going to go through the highlights here. But we kind of already covered this. President Donald Trump said that that these agencies need to immediately cease using the technology. Defense Secretary Pete Hegseth, soon after Trump's order, said on X that he was ordering the Pentagon to designate Anthropic a supply chain risk. Anthropic, which signed a $200 million contract with the Pentagon in July, wanted assurance that its AI models would not be used for fully autonomous weapons or mass surveillance. Anthropic's stance is, and this is coming from Pete Hegseth, Anthropic's stance is fundamentally incompatible with American principles. Their relationship with the United States Armed Forces and the federal government has therefore been permanently altered. Anthropic will continue to provide the Department of War its services for a period of no more than 6 months to allow for the seamless transition to a better and more patriotic service. The defense secretary said America's warfighters will never be held hostage by the ideological whims of big tech. This decision is final. I think this is going to be a major punch to Anthropic, and not just Anthropic, but Anthropic's investors, right? I believe Amazon is a big investor in Anthropic. So I'm sure Amazon is not going to be too particularly happy with this. However, you have people like Elon Musk, the mega billionaire who had been Trump's biggest financial backer in 2024, who owns XAI, aiming to compete directly with Anthropic and another major AI company, Openai, for this contract, right? I don't know if XAI Grok is going to be is really going to be that AI company, because Musk has had a lot of beef with Trump in the past, right? A lot of beef with Trump in the past. So I can see a world where Trump just looks at that bid and just, cancels it, right? Or just says no, tears up the contract. So another interesting thing about this, right? Another interesting thing about this is very reminiscent of when Google was poached by the Pentagon way back when. I think it was like 2000, I want to say like 2012, 2014 timeframe. But they were poached to help build out, build out the infrastructure, right? They were actually the early days offering some type of artificial intelligence and software for the Department of Defense. But Google's internally, Google had a big uprising by its engineers and software developers saying that they don't want Google to be doing anything with the Department of Defense at the time, right? They don't want their software, their code to be used for war. And Google opted out from doing anything with the military. And that's actually when Palantir hopped in the seat, right? That's when Palantir had hopped in the seat and took that contract. So years and years later, millions and millions and millions of dollars, probably billions of dollars after the fact, that is when Google said, you know what, screw it. We're going to be doing work for the Department of Defense. Okay. And, now here we are present day. So I'm sure people have a really big difference of opinion when it comes to this, because mass surveillance is kind of un-American, right? I'm just putting it out there, right? That would definitely be something that investors wouldn't want. That's something that normal people wouldn't want anyways. Autonomous drones warfare, I could take it or leave it. Personally, I could take it or leave it because it's already being used. If you guys have followed any of the stuff that's happening overseas, of course, especially with these $20, $50 drones, usually they're remote controlled, right? They have some type of Starlink connection to them. And these are called FPV drones, right? So the FPV drone is strapped with a rocket or an RPG missile or not missile, but an RPG, whatever, shell, I guess, or a bunch of C4, right? And it can ram into like a multi-million-dollar tank and destroy it, right? So the costs of war have dramatically changed. Warfare has dramatically changed. But then, you have radar jamming devices that are given to these troops, right, to protect against drones. So in order to up the stakes, what they do is they offer, or they started tying fiber optic cable to these drones and flying them, hundreds of meters, whatever, into their intended targets. But also what they started doing was having artificial intelligence identify the target beforehand and then just having the drone fly out. So even if it was to lose radio signal, it already has its target picked out and it's already headed that way, right? So even if there was some type of radar jamming or signal jamming device, it would stop these FPVs or stop these drones and send them back or just drop them out of the sky. Since they have AI, they could just run into their intended target. I mean, that is really, really crazy because it's not just a tank that these FPVs can run into. So I could see the kind of, not the fear, but I could see why Anthropic would not want that, right? Because they could strap a drone with a bunch of C4 and run it into a person, right? Run it into people, which has also been happening as well on the battlefields of Ukraine. So again, I see it from Anthropic's point of view as well. I really do. It is, what happens in the future? What happens, for companies like Openai that also want to try and take this contract, that want their AI models to be used on the classified network, right? And then you're going to have, of course, we have XAI, right? Grok. But what about all these other companies? What about, Gemini, like someone had mentioned in the chat? What about Google Gemini? What if their AI is going to be used for warfare, right? Or mass surveillance, right? So a lot of things start to come into question. And these companies, these AI companies, are going to have to deal with this. They're going to have to answer these questions, right? I think Anthropic is just the first company to bring it up and to say, no, we don't want our software being used for mass surveillance, and we don't want our software being used for warfare. So how are these other companies going to react, right? Because it could be a cash grab by some company, but they're going to lose a lot of face and probably lose a lot of, not reception. They're going to lose a lot of face value, I guess. They're going to lose a lot of trust if they were to be used as a weapon, right? AI is still, by and large, still very dangerous. It can be very dangerous. We're still in the very early days of AI. We don't know the direction, right? I showed you guys a video of, in China where they have a bunch of Optimus bots, not Optimus, of course, but their version of Optimus, strapped with, M4s, just running in unison and shooting their guns. I mean, and they don't fear gunfire, right? So they could run into buildings, they can run into forces that they're engaging. And these AI bots, these AI models, I mean, it gets scarier and scarier the more you think about it, right? It won't be far off before you have companies like Anduril, which will IPO sometime in the future. But you're gonna have Anduril, you're gonna have all these other autonomous vehicles, tanks, missile systems, troops, right? Half-track tanks or whatever. You're gonna have all of this hardware start to move towards autonomous, and battles are gonna be just fought using robotics. It gets crazy. It sounds far-fetched, but I think these are the early days, right? This is the early friction that we're seeing right now with Anthropic being the first company to voice its concern. Because you got to think from also the Department of Defense's point of view. What is China? Does China, their companies bring this up? Do they care? And probably not, because a lot of Chinese AI companies are nationalized, right? They're subsidized by the nation state of China. So they could care less, whatever their software is used for. Okay, so it is crazy. We just talked about a lot. I just want to cover this piece again. OpenAI is working on a Pentagon deal amid the Anthropic government impasse. So OpenAI CEO Sam Altman told his staff that the company was working on a deal that could help solve the impasse between Anthropic and the Pentagon over the use of the AI battlefield, or AI on the battlefield. No deal has been signed and the talks can fall through. So this is OpenAI trying to step in the middle and mediate a deal, which is kind of interesting because Sam Altman and the CEO Dario Amodei, they're not exactly friends, right? They're not exactly friends. Their companies are literally competing against each other, Anthropic, OpenAI. So this is, I thought, was rather interesting. Okay. But in a note to staff, Altman said that the company was working with the Defense Department to see if its models can be used in the classified settings in a way that keeps the same safety guardrails that have seen Anthropic at odds with the government. Altman said he hoped OpenAI could find a solution that could work for the rest of the industry, all right? These other AI models. So this is what he said. We are going to see if there is a deal with the Department of War that allows our models to be deployed in classified environments and that fits with our principles. and this is going to be the problem. Said Altman in a memo, we would ask for the contract to cover any use except those which are unlawful or unsuited to cloud deployments, such as domestic surveillance and autonomous offensive weapons. All right. Altman said he hoped to help broker a peace between the two parties. That's Anthropic and the Department of War / the Trump administration. We would like to help and try and de-escalate things. All right. OpenAI is looking to hold these guardrails via technical, not contractual means, such as exploring a contract that would only allow its technology to be used from the cloud, not in so-called edge cases. All right. That's when edge cases, that's when they bring the software in-house. They run on government servers. They have no connection to the outside world, basically, right? It's on a classified network. We saw that with Palantir. Right now, Palantir is used on the classified network. It's a closed network, right? So, you know, the government wants to bring these tools in-house. They don't want anything exposed to the cloud, because then, you know, these companies, OpenAI, Anthropic, or even Palantir, they could shut it off, right? They could turn it off, or there could be internet disruption, some type of connection issue, right? Maybe a data center goes offline, or multiple data centers go offline or something. We've seen that happen with AWS, right? And that could impact these tool sets, right, for the government. OpenAI, we would like to also build technical safeguards, and this is coming from Sam Altman, and deploy personnel, FDEs, to partner with the government to ensure things are working correctly, and we would offer similar services to other allied nations. Sam Altman said, if we are successful, perhaps this can be a path that can work for other AI labs too. One important point about this, Palantir already does this. Palantir, a lot of defense contractors follow this model where they'll have, you know, subject matter experts actually forward deployed with the troops or in these environments where they can support, you know, the warfighter with their software or hardware, whatever it is, right? Raytheon, you have General Dynamics, you have V2X, you have some other companies, Lockheed Martin. They have these people called damn it, I forget what they're called specifically, but they're basically just experts in that piece of equipment or that service. Microsoft actually has representatives in the Middle East that operate with the military, right? And they basically help them work through their infrastructure, right? Help them design networks, etc. So really, really interesting stuff out there, guys. But again, this is huge news. I don't think people are appreciating how big of a deal this really is, because the Pentagon does not, they want to be able to use the software unlimitedly, right? Just without restriction. They did not come out and say, yes, we're already doing mass surveillance, right? But they are saying, if like we want to be able to use the software for whatever our uses are, whatever that may be. Could be for mass surveillance, could be for autonomous weapons. You don't know that. So anyways, moving on. All right, more OpenAI information. Actually, let me go back because this is such a spicy conversation. I just want to go back and take a look at some of the comments here. Microsoft's going to pick up the 200 million and use Copilot. Oh my God. I wouldn't do that to our troops. I think Copilot's trash. I don't know. I've used Copilot like a little bit. I'm not very impressed with it. Let's see. Yep. Sergio hit the nail on the head. Anthropic is the first AI company that has the ATO authorization to operate. I'm actually surprised you know that terminology. You must come from the same background as myself. But yes, ATO is authorization to operate in classified networks. Let's see what else we got. Sean says the AI can think for itself and teach yourself and the inventors don't even know how it's happening. AI is getting more powerful. Oh man, it's a wealthy life in the chat. Hey, good evening. I appreciate you joining. DeepSeek will take care of that AI. After all, they're good at air balloons. Yeah, the air balloon fiasco where China was sending these air balloons over the United States with cameras. It's smart. It is intelligent. They were calling them weather balloons, and they were sending them over the United States, collecting basically, base layouts and geographical information. But they were also collecting a lot of, they call it signal intelligence or SIGINT. So they're collecting a lot of signal intelligence as well. But the Air Force shot it down, and then the CIA/NSA got their hands on that equipment and started going through what it was actually sending, which was a lot. Let's see. Michael Hawk says, interesting discussion. Absolutely. I think this is, again, this stuff right here is it's outside of the investing, right? We really like, there's no stock here to talk about. But I think it's going to play on the bigger AI thesis, right? The bigger AI thesis, outside of just, normal stocks and things like that. It's getting spicy for sure. Let's see. It's a Wealthy Life says he picked up Duolingo. Good for him. All right. Okay, let's continue on with this. OpenAI is working. Well, actually, we already covered that. All right. OpenAI confirms $110 billion funding round with $50 billion from Amazon, $30 billion from NVIDIA, and SoftBank. All right. So I'm going to just cover this at a high level just to kind of show you guys that OpenAI, is continuing to raise money. Yes, they're continuing to burn a lot of money as well, which can be worrisome. But, if these big companies, Amazon, NVIDIA, SoftBank, are still pumping them full of cash. All right. So anyways, OpenAI confirmed on Friday that it has raised an astonishing $110 billion in its latest funding round, with $50 billion coming from Amazon, $30 billion from NVIDIA and SoftBank. All right. We're going to skip that. So here's the details. OpenAI provided some details on its business and said it had more than 900 million weekly active users, including more than 50 million paying consumer subscribers and more than 9 million paying business users. Subscriber momentum is accelerating meaningfully to start the year, with January and February on track to be the largest months for new subscribers in our entire history, OpenAI added. All right. Now, Amazon is a part of this funding round. As part of the funding round, OpenAI and Amazon signed a deal to have Amazon Web Services, AWS, be the exclusive third-party cloud distributor provider for OpenAI Frontier, which enables the organization to build, deploy, and manage teams of AI agents. That is a huge deal because you have Amazon backing the other competitor, Anthropic. So, this deal is just going to give Amazon more. Well, what it's really going to do is just have AWS used more, right? And they're going to be able to make money off that usage, for their cloud services. NVIDIA, OpenAI said that it was expanding its longstanding deal with NVIDIA. It will use 3 gigawatts of dedicated inference capacity and 2 gigawatts of training on NVIDIA's upcoming Vera Rubin systems, all right? Their new chip that's coming out. So again, NVIDIA comes out a new chip. OpenAI is going to be the first customer, one of the first customers that's going to be able to get that chip demand, right? So again, this is bullish for NVIDIA because they don't really have to guess at where they're, how much money they're going to make. It's already been accounted for because, these other companies like OpenAI are already buying up their chips. All right. And again, I covered this before, but you had SoftBank a couple months ago sell their NVIDIA stake. And people were like, oh, SoftBank's getting away from NVIDIA, right? But they really sold their stake in NVIDIA in order to give it to OpenAI. And what did OpenAI do with that money? They bought NVIDIA chips, right? Circular financing, infinite money here. All right. This is an infinite money hack. All right. Microsoft, as part of this, as conversations about AI investments and partnerships grow, and as OpenAI announces new funding and new partners, as they did today, we want to ensure these announcements are understood within the existing construct of our partnership. Because again, Microsoft has a big share of OpenAI. There's a huge partnership between the two, but really Microsoft's the big daddy in all of this. All right. OpenAI and Microsoft said in a joint statement, nothing about today's announcement in any way changes the terms of Microsoft and OpenAI's relationship that have been previously shared in our joint blog in October of 2025. The core tenets of this relationship include that the two companies will continue to work closely across research, engineering, product development. Microsoft still has its exclusive licenses and access to intellectual property across OpenAI models and products. The commercial and revenue share relationship are unchanged. And Azure, which is the AWS equivalent for Microsoft, is still the exclusive cloud provider of stateless OpenAI APIs. All right, so Microsoft, Amazon, Azure, AWS, they're competing, right? But you have OpenAI basically using them both. So really the benefactor in all of this is going to be OpenAI. But yeah, is this bullish for these companies, NVIDIA, NVIDIA, Amazon, and Microsoft? We should see that their revenue from their data center should go up. From this usage on OpenAI. But again, that's if OpenAI can deliver. That's if OpenAI can continue to expand its usage, right, for customers. And I think this is a really good sign. Even though OpenAI is not public, they are trying to go public probably later this year, maybe early next year. They are trying to do an IPO. So we'll see what their valuation is when that time comes. Okay, so lot of news there. I'm going to cover these next two segments really quickly because we're running it's already been an hour and I've only gotten through half of the information I really wanted to get through. Again, I cut out a bunch of stuff and that Anthropic news segment really took a bunch of it. All right. But Netflix drops Warner Brothers bid, shares rally as Paramount emerges victorious. But even though Netflix didn't win the deal, their share price still skyrocketed, right? People were still happy with that. Investors were still happy that they dropped it because it was just sucking a lot of the energy away from Netflix. So Netflix rose 14%. Warner Brothers Discovery actually was down 2%. And Skydance, Paramount Skydance, went up 20% on the announcement of Netflix bowing out. But Netflix bowed out and they were still able to get a bunch of money from this deal. All right, so shout out to any Netflix holders out there. All right. I don't know too much about this deal. I know it was big news and, you're going to have Trump administration involved in this. And there was all this talk about this deal is going to, probably go on. It's going to go through the courts. It's just going to be a really drag on not just the management's focus, but, on Netflix shareholders. So Netflix dropping this sent the shares up. Investors are happy that they're just moving on, that they don't have to deal with this nonsense. They're not going to be stuck, in court battling this out. And they could just move on. Netflix is still a very good company and they still have a lot of media coming out. So yeah, Netflix, in my opinion, is really good. Okay. So Paramount is actually the one buying Warner Brothers. So yeah, here we go. Paramount. So let's go through this real fast. Netflix had a deal to buy Warner Brothers for $27.75 per share, but it was topped by Paramount's $31 per share cash bid. The deal covers all of Warner Brothers businesses, including CNN, TBS, and TNT. Warner Brothers gave Netflix a chance to increase its proposal, but Netflix walked away from the deal on Thursday night, much to the delight of shareholders. Netflix jumped more than 9% on Friday. The transaction we negotiated is coming from Netflix, would have created shareholder value with a clear path to regulatory approval. Netflix co-CEOs Ted Sarandos and Greg Peters said in a statement. However, we've always been disciplined, and at that price required to match Paramount Skydance's latest offer, the deal is no longer financially attractive. So we are declining to match the Paramount Skydance bid. All right. So again, Netflix just being very prudent in their acquisition. If they were to increase their bid, they just don't see it as it being accretive for investors. So now Skydance is stuck with it. Let's see if Skydance, can turn it around or if that deal is going to be accretive for its investors. All right. So moving on from that, this is the thing I wanted to talk about the most was the AI case study. Jack Dorsey, if you don't know who he is, one of the founders of Twitter, but also owns Block, which is a payment system of payment software. But Jack Dorsey made the loudest case yet that AI is already replacing jobs by cutting 40% of his workforce. All right, Block loudly professed that the days of AI taking jobs of humans has arrived. Jack Dorsey told investors that new intelligence tools are changing how companies are built and run. The stock rose sharply on the announcement. All right, but some skeptics remain, with analysts at Piper Sandler reiterating their sell rating on the shares. Okay, I didn't want to go through this whole thing, but I just really wanted to cover this at a high level. You have a company like Block that just slashed its entire workforce in half. Okay, it won't be far-fetched to start seeing more of this happening. And of course, you have a bunch of people that are now without jobs. Right. So that's going to add to jobless claims. That's going to add to unemployment. And that's going to add, that's I think it was, 4,000 jobs, 6,000. Yeah. So it was 4,000 jobs, right? Because he had reduced his headcount from over 10,000 to just 6,000. So that's a 4,000 difference. So that's 4,000 jobs that need to get created for these, people that got laid off. Right. So that's a big deal. That's a really big deal, in my opinion. Again, this is just another case study for why AI is going to eat the labor industry. All right. So I just wanted to cover that real fast. Let's see. I'm assuming you're referencing from Michael Hawksworth. I'm assuming you're referencing this. Block is similar to like a PayPal. It's been a long time since I looked at Block. But they used to have these little block you could actually scan your credit card through. They would send these to like business owners, small-time business owners. You could pay by using a phone. I have not looked at Block in a very, very long time. Their stock is XYZ. We could take a look at XYZ real fast. Hold on a second. But their stock is XYZ. And I don't even know how it's doing. Let's see. So year to date, yeah, of course, it's down. Software over the last years, really bumpy. Didn't really do much. And you guys can see here on the announcement, it jumped up 25%. Holy crap. 16% on the day. That is a massive, massive jump. Look at that. Okay. Yeah. And then over the last year, over the last 5 years, yeah, not exactly inspiring a lot of confidence here. I don't know if they'll turn around. I don't know what the attractiveness of Block is personally. I really don't. Because you have so many competitors out there, but apparently, they offer some type of software where small vendors can pay and they charge less fees, right? But you have like Stripe that's hopefully going to be IPOing later this year, if not next year. Stripe is a payment system built by two brothers, and they built like a multi-billion-dollar business out of Stripe. And Stripe, all it does is allows business owners a payment backend for like websites or for systems, right? You can use it like Stripe APIs and things like that. And their fees are much less compared to some of the bigger players in the space, right? So that's how Stripe basically took the market. You'd be using Stripe and you won't even know you're using Stripe. I first learned about Stripe back in like 2015, 2016. And their business has exploded. A lot of people want them to go public. Anyways, moving on. We have CoreWeave CEO defending the CapEx plans. All right, CoreWeave, if you guys remember, is a data center, pure play data center. They're backed by NVIDIA and a couple other partners. They have Openai as a partner, Microsoft as a partner. I'm not going to go into this article because there's really not much here. But instead, we have a nice video from Michael and Trader, who's defending the CapEx spend. All right. That's the biggest problem with this is CoreWeave's CapEx spend, because again, it costs a lot of money for data centers, right? You have to spend money on the hardware in order to make any type of revenue, right? You need those chips for customer demand. So that is basically what's happening here. CoreWeave is spending a lot more money on CapEx, capital expenditures, and the market just did not like that. As a matter of fact, the market didn't like that so much that the stock dropped about 20%. So let's listen in on what Michael and Trader had to say. And again, this leads itself to, again, more about the AI trade, more about data center demand.
But I guess, Jim, to your point, that money's going to go out towards compute from OpenAI, which does kind of get us towards our next guest.
I am not going to be pessimistic when the 10-year's going down in yield. I'm not going to be pessimistic when OpenAI, which at one point I thought couldn't get the money, got the money.
Okay, so
this is Michael and Trader right here.
Come on the show. I've kind of been in the press a lot. The demand for the infrastructure has been relentless. It's been relentless for 3 years. We have never wavered from that position. Our clients are increasing the demand signals that they're giving us. They are broadening across the economy. They're moving from, just the AI labs and the clouds into the enterprise, into the sovereigns. The business signals are overwhelming. We are constrained by our ability to deliver more capacity to the market.
You heard that. CoreWeave is constrained by its ability to deliver more capacity to the market. Okay, so that means they need more hardware, more data center, more electricity, and all the metals that go into that, right? So he's saying that they're going to have the demand, or they have the demand, they just don't have the capacity. That's a big deal.
Okay, so listen, that's a positive story. Only one of the analysts thought it was bad. Every other analyst congratulated you. The stock is down very badly. You were in the business of trading. What's wrong with the stock, or what's wrong with your narrative?
Look, end of the day, my job here is to drive value and take advantage of this generational opportunity to build infrastructure in a global build out of compute. And we are doing an unbelievable job of that. We are scaling into this. We made an intentional decision to accelerate our builds, understanding that there was going to be a margin hit. But this is a once in a generation moment. And our job is to go out and to secure as much capacity as we can so we can satisfy the demands of our clients to deliver compute.
Okay, is there, and then I'm going to give it to my colleagues, but is there some level where you're saying, you know what, we're done with losing money. Let's stop losing money. Losing money's bad. I mean, I know that you...
Losing money is bad. There's a whole ETF that goes counter to what he says. This dude cracks me up. Anyways, Kramer's a good dude. All right. Anyways, Kramer's a good guy. Let's continue listening in.
Been able to sell a lot of stock. Congratulations, made a lot of money. It's very positive. But how about the fact that, like, the shareholders? At what point do you just say, you know what, guys, we will reap what we've sowed?
Look, the way that this business works is you make an investment today and you sell compute for 5 years. So every dollar that we're putting to work today is ensuring that we are going to earn dollars over the next 5 years. So we like the return profile on the investment. We talked about this yesterday on earnings that, you know, a stabilized data center is going to throw off a margin in the mid-20s. That is a very, very healthy return for us. It gives us the scale to be able to build and monetize across our platform. I was on with NVIDIA with Jensen last month, where I talked about the fact that because they are adopting our reference architecture, it's going to give us the ability to generate returns off of other people's GPUs. They get to build the infrastructure, and we get to bring the software layer, which we are so good at, to be able to expand our TAM, expand our addressable market so that we can generate returns from folks that want to control the physical infrastructure themselves. We think it's an incredible opportunity. We think it's a high margin business that will be additive to the basic business that we have built so far. Our business is success-based.
All right, we're going to go ahead and end it right there. But yeah, CoreWeave is not just a data center. I always forget this. They actually have a software that manages the data center as well. And it's supposed to be able to manage the workload, similar to like AWS. It's more or less a software, right? AWS is a software of management for the cloud. And when you log into like AWS, you can build out large infrastructure using AWS's management console. So I forget that CoreWeave actually has a management console as well. But anyways, data center demand, you have to look 5 years in the future. The demand is there. They're building out, spending a lot of money on building out that infrastructure, so other companies will be able to, build out their, softwares, etc. So still, I'm still bullish on data center demand, still bullish on AI thesis. CoreWeave is a moonshot for me at this point. I don't have any shares in it. I don't have a position on CoreWeave except for the hypothetical 100K challenge. But CoreWeave again is a data center that IPO'd last year. It saw really big growth, really tremendous growth, and then the shares have just been getting beaten down ever since. So will it return? I don't know. But, again, data center demand is not going anywhere. It's not going away. Okay. So we're going to move into some Bitcoin or some strategy news. All right. And the most hated, loved person out there. We're going to be talking about strategy, or stock, I should say. And we'll be covering just a little bit about Saylor, and then we'll move on to gold and rare earths, some information that came out over the last day or so. All right. So Amundi, which is a French asset manager with $2.3 trillion trillion pounds in assets under management, increased its stake by 373%. All right. And this is a stake in MSTR. In my opinion, for me personally, as a shareholder of a derivative ETF, MSTW, I take this as a signal, right? That I went over several different of these large institutions increasing their shares in MSTR. And, whenever people buy MSTR, whenever they buy these shares, MSTR turns around and buys more Bitcoin. That's their only goal, right? Is to buy more Bitcoin. And we covered how in December, MSCI, there's all this FUD out there that they're going to delist MSTR from all the passive indexes. But instead, what they opted for was they'll keep MSTR on the passive indexes, but they won't just add shares, right? Because in order for MSTR to increase its Bitcoin per share or to increase its Bitcoin holdings, they need to dilute the shares, right? They need to increase shares. So as people, as institutions, retail money buys these shares, they're able to buy more Bitcoin, right? So that's basically the business model for Strategy. And that's how the perpetual preferred shares came out. We're going to be talking about Stretch here in a moment, but that's how the perpetuals came out, right? They basically strip away a lot of the volatility. They were able to raise, 2 billion here, 500 million there, $1 billion there off of these perpetuals, and use that money to go buy more Bitcoin, right? So I thought this was interesting, because you have large asset managers increasing their exposure. Now, this might be, maybe 1% on their balance sheet, right? Not exactly a whole lot, but still, it's the fact that these asset managers, these large institutions, these banks are buying, because you had the Bank of Canada also buy MSTR. I covered that in one of the streams as well. So just thought this was really, really interesting, bullish signal for me, again, as someone who is very bullish on MSTR. I think, the share price is crappy right now. Yes. A lot of people will say, it's a Ponzi scheme, et cetera, but they can't answer why it's a Ponzi scheme. They'll just say it because they're parroting other people that they heard on X or YouTube or social media. But if you understand MicroStrategy, I'm not here to convince you, but if you understand MicroStrategy, what they're doing, what the goal is, if you're bullish Bitcoin, you're bullish MSTR. I mean, that's just basically it. But anyways, wanted to cover this piece. So if you have not seen, and we're not going to watch this video. It's 50 minutes long. But Michael Saylor had a keynote at the Bitcoin magazine conference, and I thought it was a phenomenal keynote, because he's talking about Stretch and digital credit and why it's not only just important, but why this is going to be the direction that the world starts heading into. And he's already ahead of the curve by having Stretch. All right. STRC is the ticker. They basically strip away the volatility, collateralized by Bitcoin. It pays a 11% or 11.25% dividend return of capital. Okay. So you're going to get 10 years of tax advantaged distributions, from Stretch, right? And he's been going on these media tours to hype up Stretch, right? To talk about Stretch and digital credit, right? Because we've seen that, traditional private credit is going in the toilet. You have annuities that pay out 5 or 6%. You have bonds that pay out like 4%, 3 to 4%. You have a high yield savings account that, as the federal funds rate goes down, that yield goes down with it, right? So you're probably getting maybe a 3%, 4% on your money. But Stretch, you get the volatility of Bitcoin stripped away, collateralized by Bitcoin, and it's paying out a steady 11.25% dividend yield per annum. But on top of that, the share price for now is relatively flat. I mean, what is not to like about this, right? But the product that he's been going on world tour talking about, this media blitz, is all about Stretch. So I really recommend, especially if you're, an investor in Stretch or you're an investor in MSTR, to check out this, or if you're interested in this, check out this video. Okay. Michael Saylor Strategy World 2026 keynote on digital credit. And why this is so interesting is because he was saying, if companies use his Stretch product, they can offer it to the world, right? This could be offered in not just the United States. If you're a bank, right, some type of institution that wants to offer its clients a digital credit-backed security, Stretch, that offers a huge dividend yield, then Stretch makes sense, right? Stretch could potentially make a lot of sense. And then you had 21 shares bringing Stretch exchange-traded product to the European markets. Okay. This is absolutely big news, all right? Because this is the first time that I know of where a ETF manager is actually launching a ETF with only one of the perpetual preferred shares from Strategy, and that is Stretch. Okay, so as this Stretch, this ETP continues to get inflows from investors, MicroStrategy is just going to go out and buy more Bitcoin. All right. That's it. That's their big goal. So they're going to be able to raise money in other countries now. That's the big thing, right? Is that they'll be able to start, kind of going out into the world and raising money from all these other countries. Because Europe has a huge amount of money that's locked up right now. That's locked up in traditional savings accounts or bonds or treasuries, whatever. But now they're opening that market up to Strategy via this ETP, right? So again, I thought that was really, really big news, especially if you're a shareholder in MSTR. Duncan Moore, president of 21 Shares, emphasized that the product's role in innovation. The 21 Shares Strategy Yield ETP reflects our commitment to lead by combining high income potential with a familiar exchange traded structure. Stretch offers both institutional and retail investors an efficient way to add to their portfolios. I mean, think about a retirement, right? People talking about the 4% rule, get your account and then withdraw 4%. Well, what if you could get 11% or 10% from something like a stretch, right? And your cash would just remain flat. Like that to me is extremely attractive. Just for me personally, I think that is a really good product. Of course, if you're not a fan of Bitcoin, if you're not a fan of MicroStrategy, then none of this really makes sense for you. All right, but this is the product that they're coming out with. All right, so we already kind of covered that. I want to just show this because, again, I want to pat myself on the back, but I made a video 7 months ago explaining my thesis for a Bitcoin strategy or for adding, MSTR into the portfolio, right? Because as I was doing my own due diligence, I inadvertently orange pilled myself and then became bullish on MicroStrategy when I was actually trying to find a bear case to stay away from, MSTR, right? I actually ended up becoming bullish on MSTR, but I wanted to at least point to the tailwinds, right? Point number 4, further ETF adoption on MSTR and Bitcoin globally. We saw Morgan Stanley's trying to launch their own IBIT version, but they're trying to launch it in Europe. Okay, and then now we have MSTR with their Stretch ETF, ETP being launched in Europe by 21 Shares. More and more countries are going to start launching ETF products tied to MSTR. It's only a matter of time. So even though the share price is down, right? Bitcoin is down. It's a waiting game. For me, conviction, high conviction, this is a waiting game. Eventually it will go back up and it'll be an ungodly God candle or whatever they're calling it. It's going to be face ripping. Again, you just have to play the waiting game. And this is not financial advice to go out and buy these products. This is not financial advice to open a position in MSTR. Do not borrow my conviction, because if it goes down even more, I don't want you to be upset, saying, oh, I listened to Eugene and bought a bunch of MSTR. Now it's down in the trash can. Do your own research, do your own due diligence. But this is Stretch at a high level, offering an 11.25% dividend yield, and it's $100 a share. And this came out, let's see. This launched not too long ago. Let's see. So real fast, I just want to cover this on kind of how stable this product has been. We'll just look at it. So it launched back in July, and I mean, it's done pretty well. I mean, it hasn't gone down, even though Bitcoin is basically cratered or face planted. It seems Stretch is doing what it's supposed to do, right? And that is be very, very stable. So shout out to any Stretch holders out there. I know there's a few of you that did buy Stretch when it launched. So I hope you guys are happy with the product. Myself, I do not have a position in Stretch. It's not something at the top of my list. All right. Here's another interesting post. Now that we're in the crypto segment. Okay. Grant Cardone, you guys know him. I'm sure you guys know him. Billionaire, $5 billion assets under management, real estate background, real estate guy. He is looking to tokenize his real estate holdings. And what do you think he's going to tokenize his real estate holdings on? Right? He hasn't announced what that will be yet. I think it's going to obviously be an Ethereum blockchain based, rail of some sort. Right? I think so. But this is interesting because this is the first REIT, real estate investment trust, or the first real estate company to come out and say that they're going to tokenize their real estate holdings, right? A large institution or a large company like this, a large investment firm. You still have like Realty, real and then t.com or .org, I forget what it is, or .co, realty.co. And basically allows you as an investor to invest in real estate using crypto. And let's see if their webpage is still up. Yeah, so it's fractionalized investment in tokenized real estate. Now you could do crowdfunding. You could do things like, Fundrise. You could buy a publicly traded REIT. Those are always options. but this just blended real estate and cryptocurrency into a single product, into a single package. But you need to be an accredited investor in order to invest in this thing, right? Into this product or this service. So anyways, Grant Cardone is going to start tokenizing his real estate holdings. He came out and he actually had a he actually had an interview on Fox Business. So I wanted us to listen. I wanted to cover this last week or earlier this week. I forget. I just didn't have a chance to. So I want to cover this in this stream.
Aren't quite ready to call.
So one key point, he is starting a Bitcoin treasury, essentially is what it is, right? So this is different from tokenizing his real estate assets. This is a Bitcoin treasury strategy that he's also following, or a DAT as it's known.
All the prolonged drop in Bitcoin's price, the new crypto winter. But as performance gets close to hypothermic levels, Standard Chartered's digital asset analyst warning that Bitcoin could fall to 50,000 by year end. Okay, 50,000 by year end. Right now, it's at 68,131. The bank backed up that forecast by slashing its price target to 100,000 from 150,000 as a result of worsening macro conditions. And investors trading it out for what? Gold, whatever, heading for the hills. But one real estate investor is heading full throttle into the frigid winds, buffeting Bitcoin. He's Grant Cardone, the CEO of Cardone Capital, the real estate mogul, crypto investor, and widely followed business influencer. Has 5 million Instagram followers, 3 million YouTube subscribers. He is now melding concrete with crypto. We're talking real estate mixed with crypto. Grant, great to have you on the show. I can't tell you, I tweeted out that you were going to be on, and so many of the followers on X that I have were, yay, Grant. Can't wait to hear what Grant has to say.
Well, thank you for having me. And I hope the people that follow me, I hope that you didn't get too much heat for having me on your show, because a lot of these old crypto hands are going to say, oh, if Grant Cardone's getting into the game, real estate guy, then it must be the top for Bitcoin, which I don't think it is.
Well, and one of them said, don't throw any softballs at his head, Liz. You got to go right at him. So let's go for it. There are just a few finite asset classes out there, and real estate and crypto are two of them. How are you mixing the two, and why?
Well, look, I've been buying real estate for 40 years, multifamily real estate, the cash flows, institutional quality, great assets. And, ran across Bitcoin about 13 years ago and looked at the possibility of combining the two, one that's visible, the other that's invisible, one that's very, very liquid, being Bitcoin, almost too liquid sometimes, and the other that's very illiquid, one that cash flows and one that doesn't. So it's like two financial vehicles that are opposites. They say opposites attract, Liz. So we looked at putting these together. I'm not a gambler. I'm a very conservative investor. I like cash flow. I love real estate. But I don't like that real estate is very heavy. It's very slow to move. It's very, very expensive to fix. Bitcoin costs nothing to fix. There's no roofs, no plumbing, no HVAC, no evictions, no property taxes. So we combine the two. We have the largest real estate Bitcoin hybrid in the world. We've done 5 different projects just last year, and I expect to be the largest real estate Bitcoin hybrid that will challenge the old REIT structures.
Well, how does that work?
Challenge the old REIT structures. All right. That is a big deal. I'm keeping my ear to the ground because I want to see if any more REITs start a DAT, right? A digital asset treasury, something with Bitcoin. I don't think it's far-fetched, and in the future, as more players start to enter the space, of course, Cardone Capital is going to be the first one, the first REIT to have a Bitcoin treasury. But this is big. Like, this is huge news, because there is no REIT out there that has a digital asset treasury. This is the first one. You have a lot of data centers that had a Bitcoin treasury because they were a Bitcoin miner, right? You had a lot of these just random companies starting their DATs for Bitcoin, but they were mostly data center style companies, right? So this is the first real estate specific company that I know of that's starting a Bitcoin DAT. So again, I think this is huge, and this could evolve into something more later down the lines. Now, do I think these bigger players, someone like Avalon Bay Communities or Mid America Apartments, REIT is going to start doing this? I don't know. Probably not. To be honest with you guys, probably not. But I could see maybe a private REIT doing something like this, right? There's only a handful of private REITs out there. There's not that many. One is, like a Fundrise. They're a public, non-traded REIT. I could see someone like them probably including this in the future, maybe. But they have a couple of the other funds out there. They have like a VC innovation fund, and they have a private credit fund. So I don't know, more to follow, but I think this is really interesting.
Because, and I see you've got the 10X Space Coast Bitcoin Fund that combines something like 300 apartments in Melbourne, Florida, with 15 million worth of Bitcoin. You've got a Miami River Fund, similar, South Florida. These are all in Florida. Boca Raton Fund. Tell me, and then you say that you pay out dividends for investors who put in as little as $100. When you say you're melding them, explain what that means.
Well, the $100 is that's not true. That's false. Okay. So we have, like the Bitcoin Melbourne project, we did it was an $88 million project. I bought the asset for $72 million. We added $15 million of Bitcoin to the purchase. It was an $88 million cost to build asset that we stole the asset. So we buy best in class institutional quality asset below replacement costs. Rather than just getting cheap real estate, or what we believe is real estate, that's on sale or a discount, we just stack the difference, Liz, with Bitcoin. Rather than just buying cheap real estate, we end up with a great deal in the real estate, add the Bitcoin, we pay cash for both. And then that property cash flows, I think, at about 4.5% with, as you mentioned, $15 million of Bitcoin to purchase.
How can you pay out dividends when Bitcoin is crashing, which is what we've seen since October?
Oh, because we paid cash for the Bitcoin. We paid cash for the real estate. We have about $3.5 million worth of positive cash flow in the real estate. And we use the dividends from the real estate to actually buy more Bitcoin.
So I'm going to end it right here. But I mean, basically, he uses the cash flow from real estate to buy Bitcoin, right? After, of course, the dividend is paid to investors. If you guys know anything about a REIT, you know that it has to pay, it's obligated by law to pay out about 90% of its, rental income after expenses, everything else, as a dividend to investors, so, fascinating stuff, right? Fascinating stuff. I think we're going to see more of this, more of these companies, more of these REIT style companies start to add Bitcoin to their treasuries, or Bitcoin to their balance sheet. I think it'd be cool. And Saylor went on a tangent on one podcast where he was saying that, more and more companies should add Bitcoin to their balance sheet, right? Of course, he's a Bitcoin, fanatic. But at some point, it does make sense, right? Because companies have these balance sheets. And I'm not talking about Mag 7 or companies in the S&P 500. It's talking about regular Joe Schmo. If you're running a small business, why not start a digital asset treasury, right? Why not start a Bitcoin treasury, right? For your company, add that Bitcoin to your balance sheet. You could be more valuable than some companies in the future, right? That was his case. Of course, I'm not saying go out and do that. Okay, so moving on from that, we're moving on to our metals segment. We're already running at about an hour and a half, so I've been blobbing on for quite a while now. So we'll try to wrap this up, and then we'll get to just chilling, I suppose. But anyways, this is coming from the Kobesi letter. This is on gold, okay? Indian investors are rushing into gold at unprecedented pace. Gold ETF inflows in India are up 250 billion rupees, an all-time high. As a result, inflows into gold funds have surpassed equity mutual fund inflows for the first time. This comes as gold ETF inflows have risen more than 900% since July. Over the same period, equity fund inflows have declined 170 billion rupees. All right, as the world's second largest gold consumer and one of the biggest importers, India's shift towards gold ETFs makes a fundamental change in how its investors are allocating the capital. All right, my takeaway from this, right? My takeaway just from this blurb about India. Well, two takeaways. One, India is obviously, I didn't know India was the largest consumer of gold, right? Or importer of gold or purchaser of gold. That's actually news to me. But two, it is easier, in my opinion, probably to buy a gold ETF, right? You don't need to come with cash, right? You don't need to come with a lot of cash, to buy, I don't know, an ounce of gold or a couple ounces of gold or a chain of gold or whatever, jewelry. You have to have cash for that transaction, full cash. Right? If they want $1,000 for a necklace, you need to have $1,000. But let's say you have $200, $100, right? Whatever that is in rupees. But you can buy an ETF and still have that exposure to gold, still be able to participate in that upside of gold. So I think this was really, really interesting. Again, for me personally, I hold GLDM is the ticker. So I hold GLDM. That's my gold exposure for my own portfolio. Again, this is just lending to the story, right? More countries, global monetary policy is disgusting, right? Everyone's printing money. And, you know, this just makes gold all the more attractive. But also what lends to gold going up in value is uncertainty, right? Whether it's geopolitical uncertainty, wars, monetary uncertainty, you know, governments just being irresponsible with money and printing it like we are, like the United States is. This is what sends gold prices higher. And we see that China has been stockpiling lots and lots of gold and kind of getting away from U.S. treasuries. So it's happening out there. Poland has been stockpiling a lot of gold as well. All right. Meanwhile, you know, the United States, we're stockpiling Bitcoin, right? The Bitcoin strategic reserve. Anyways, moving on from that, India's gold demand to be led by institutions and market infrastructure, World Gold Council CEO said at the Rising Bharat Summit. Okay, I'm just going to cover just the first two paragraphs here. India's next phase of gold demand is likely to be driven by increasingly by institutional investors and financial market infrastructure rather than households alone. David Tate, Chief Executive Officer of the World Gold Council, speaking at the Rising Bharat Summit on Friday, said on Sunday. Tate said that the current gold rally is being underpinned by structural forces rather than short-term price momentum. I know you'd expect me to say gold is going up given my position, but I think there are 6 or 7 main reasons why gold will continue higher, he said, citing geopolitics, interest rates, central bank buying, and what he described as growing fear of runaway global debt. So, as we just talked about. So bullish gold, guys. All right. If you don't have that gold exposure, something to consider for your own portfolios. There's plenty of products out there, not just for spot price gold. You know, you have GLD, GLDM, you have GDMN from Wisdom Tree, goddamn right, which is a 1.x futures based, you know, ETF. So you're getting a lot of pump for your you know, your dollar. But you also have income ETFs, right? You have KGLD from Curve. You have SLVX coming from X funds. You have SLV or KSLV from Curve as well for Curve Silver. So you have a lot of products hitting the market, right? There's just this insatiable demand for gold. And as these ETFs, think about this, as these ETFs come out, and if they have the spot price ETFs in their holdings, that's just passive flows of more money going into gold, right? And that gives you a little bit of that exposure to actual gold price, right? So absolutely crazy what's happening in the space. I did not have time to actually go through this entire article to highlight the stuff, but this is really, really important to the story of the commodity super cycle, the United States weaning itself off Chinese supply chains. But what are the impacts, right? It's not just because the United States stops buying from China that doesn't weaken China, right? Now the United States needs to look elsewhere for these rare earths, right? For these metals, right? So rare earth shortages worsen in U.S. aerospace chips despite trade truce, right? And that's with a lot of the other partners that the United States has, right? Like Australia, companies in the European Union, etc. So we'll just cover the first two paragraphs of this, all right? Because the stream's already gone on quite long enough. All right, suppliers to U.S. aerospace and semiconductor firms face worsening rare earth shortages, with 2 turning away some clients. Industry insiders said weeks before U.S. President Donald Trump is expected to meet his Chinese counterpart Xi Jinping for a summit in Beijing. The shortages center on rare earth such as yttrium and scandium, niche members of the family of 17 elements, which play tiny but vital roles in defense technology, aerospace, and semiconductors, and are almost entirely produced in China. And before I hear it, shout out to the Victor Crooks. All right. Shout out to Padre, this guy right here. All right. He's been talking about yttrium, scandium, you know, for a while. He's been talking about this in the Discord. And of course, you know, some people, it falls on deaf ears, mine included, right? But this man just don't miss. All right. He's been pumping out that very valuable info in his commodities channel for quite a while. So shout out to you, Victor. All right. So that is it. Do I have the stream at 1.5x? Why is Eugene talking so fast? Yeah, man, I'm seeing the time. It's like 1 hour, 38 minutes. And I'm like, I got to get through this stream, right? I got to get through this stream real quick. But yeah, that is why I'm talking so fast. And my voice is starting to crack as well. It's starting to get coarse. So maybe I should chill out and take a sip of coffee real quick. We got the working investor, a golden opportunity. Gold, working investor, your ears must have been burning because I was talking about international funds earlier. So yes, much like this golden opportunity, we're also going to have the golden dome. And this is the golden era for the United States, right? We are winning way too much, ladies and gentlemen. We are winning just way too much. As a matter of fact, let me see if I can find the clip because it's always good to just know how much we're winning. Where is it? Oh, please tell me I can find it here on X. I need to just bookmark it. There we go. Boom, got it.
Winning again. In fact, we're winning so much that we really don't know what to do about it. People are asking me, please, 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 Mr. President, we're winning too much. We can't take it anymore. We're not used to winning in our country.
Honestly, I'm ready to start losing. At this point, I'm ready to start losing, okay? I'm just ready to start losing because maybe the stock market will go up. All right, ladies and gentlemen, that does it for this stream. There was a lot we covered, a ton of information that we covered. I hope you guys found it extremely valuable, if not entertaining, a little entertaining, or at least you learned something new, right? I'm hoping that this stream was at least fun for you guys to watch. I think I'm going to open this up to the questions. Any questions in the chat? I'll be here for another 15 minutes before I got to book it. So with that being said, again, appreciate everyone joining this stream, and I'll open it up. Let me see if anyone wants to come on the show. Of course, keep it PG. All right. If anyone wants to come on the show and chat it up for the next 10, 15 minutes, I put the link in the YouTube chat. If you're watching on X or YouTube, I'd appreciate a like. If you're not following, please follow. All right. I try to do these streams at least daily. I have been missing some because I've been kind of traveling in and out and around. Right. So if anyone wants to come on, the offer is there. I said I'd go back to ETF to look at. Where is it? Is it international ETF? We could take a look at that one. Where is it? Not IDVO, not AVDV was the one. Let's see, AVDV ETF. Let's see what that is. Okay, so this is the Advantis International Small Cap Value ETF. Let's see if it inspires confidence. Ooh, that inspires a lot of confidence. Up 62% year to date. Nice. And this is coming from, let me make sure I get his name out there. Boom. That's coming from Serial Beggar. Thank you. Let's see. As a matter of fact, one thing we could check is the rankings. Let's see how bad my hypothetical oh my God, that's so nasty. Ooh, that is so nasty. Dang, that is horrible. Okay, so Eugen is down almost 5% for the day. Let's see who else we got. We got Victor up 1.22%. Actually, he should be up more because of that one stock that he does have that just won't populate. His portfolio, I think, is actually doing better than all of ours. Let's take a look. Damn, I got slaughtered today, guys. Chat, I got slaughtered today. Down 4,000. All right. Okay, so let's see. So Victor, yeah, his is probably closer to like 108 and 109. So he's definitely leading it. I have to go back and figure out what's going on with Seeking. I keep saying that. I always forget right after the stream. We have OK coming in at 98K. All right, he was up a percent. Serial Beggar, again, with a meme portfolio of his namesake. He's actually doing really well, above 102,000. Pay Me in Dividends is doing well. YouTube channel, check him out. That name again is Pay Me in Dividends. He's actually up 5,000 or almost 6% on the day. Let's actually take a look at his holdings. So his biggest winner right now, oh my God, is Dtraf. Yep, Dtraf and Nflx, of course. So Pay Me in Dividends, ladies and gentlemen, definitely check him out. He's bullish, very bullish on Microsoft right now, year to date. He's been talking about Microsoft and Grab. Let's see. All right. So anyways, we'll look at the damage for my portfolio. Let's see. I'm down CoreWeave. CoreWeave, I'm down almost 20%. This damn guy. All right. 20%. Everything else seems to be kind of minute by comparison. BM&R down 7%. I'm still holding ons in this hypothetical portfolio. MSTR down almost 3%. IBIT down 2.8%. NB, not Nebius, it's Neocorp, which is a metals miner, down almost 6%. USAR, make USAR great again. All right, USAR is down 6%. UAMI, I'm up just a little bit. Palantir, I'm up just a little bit. Gold, I'm up. Man, I should have just threw silver in here. I should have just threw silver in there. Sergio says, bro, it's game over for you. Hey, we're just in the second month. All right, we're going on in the third month. There's still many, many months ahead. All right, this portfolio can turn around. All right, and then I could pay myself that 1,000 USDC and then probably go and, I don't know, blow it at the, I'll probably blow it on something. I don't know, maybe a 5X ETF. Let's cover that real fast. So in the ETF and filing updates, in the Discord, there we are. Let's pump that bad boy out. So these are 5X ETFs that are supposed to come out in the future from Themes. All right, Themes ETF Trust. You have 5X long 20 plus treasury, right? China Daily, China Technology, financials, gold miners, home builders, India. Oh my goodness. Look at these guys. Who wants to degen? Raise your hand out there if you want to degen. We have Mike who's in the chat. I'm not familiar. Let's see if this is I've never met you, Mike, so I'm gonna bring you on. So let's listen in. Hey Mike, can you hear me?
Yeah, I can hear you good. Can you hear me?
I can hear you. So how are you doing? Welcome to the show.
No, thanks very much. I was just keen to test the technology. I never joined a show, but just thanks to you for a great job. Been watching you for a few years now, and very interesting to learn about the high yield ETFs and the big journey everyone went on with those, and then just the market as we all try and get sort of inflation beating returns out of the market and deal with this volatility and all the change in technology and AI and everything. So yeah, good job.
Oh, I appreciate it. I really do. I mean, I haven't talked a lot about the high yield stuff in quite some time. I mean, you guys know that like my videos, I pretty much stopped at the gold debasement was my last video. I don't know. There's a lot of other YouTubers. I got to give them a shout out because they do great work out there. You know, you have Spencer Invest, you have Marcos that does really good jobs on those videos. You have Income Architect. Those are pretty much their bread and butters. I like the high yield space. It's just, again, for me personally, there's a bigger world out there outside of high yield, right? And everyone wants the magic pill, the magic 100% yields with no NAV erosion. So I eventually just got kind of tired of covering the same stuff. I mean, all of these ETFs eventually run into problems and people discover it. And then they say, oh, they're all hyped about the ETF. And then eventually, oh, these ETFs all suck, right? That's usually the evolution of the high yield investor. But what are you investing in? Like, what are you doing to survive this volatility out here?
Not too good. I'm 99% cash.
Wow, really? Are you waiting for that big dip to happen?
Potentially, yeah. But no, I mean, I'm just protecting my capital. I'm not as brave as most of the people who join these shows and that, But I mean, no, I do have money in high yield ETFs. I mean, they do just get NAV erosion. So I don't know if at the end of the year they can recover. But yeah, I've got Curve, the Curve high yield one, which I thought would be good. It had AMD, had silver, had gold. So then just after, you buy it, the silver crashes, gold crashes. I mean, it's not a huge investment, but I'm just trying to watch how they respond and see how those managers sort of manage the volatility in that. So, just sort of reinvesting that distribution. And what else? Round Hill, round till ETFs. Oh, and then I mean, for me, I'm actually a big fan of Neos. And for me, I do have some money in the 3-month Treasury boost. So this is not what the people on this call want. I mean, people want to put a little bit of money in and get a 10x return in 2 months. I understand, but I need to find more opportunities like that and have some more risk capital. But at the moment, I'm rather conservative. So NIHA, the international high income, it should be a 14% distribution, and it hasn't NAV eroded in the last 6 months or so. So that's been quite good. So yeah, I'm just trying to beat inflation, and I'm not winning at the moment, but I'm not losing like the market is. So
are you retired, or are you actively working?
No, I have my own business.
Okay.
Yeah.
Okay.
So yeah, but I just love following the market and like listening to some good YouTubes where you guys have done a lot of the hard work. So thanks very much. So I'm based out of Woodstock, Georgia, in the United States.
Okay.
And, yeah.
How's the weather over there right now?
And Georgia has been raining a lot, and but not as cold as the rest of the country. So weather's been good, in a sense. Other than the last few days, torrential rains in Woodstock, but yeah, not like the rest of the country. So I can't complain.
Do you have any like themes in mind or picks in mind? Are you waiting for any particular company to drop in value, or anything like that? Is there anything at the top of mind? Whenever we're like, because we always talk, like we always cover, like, hey, there's going to be this big drop, and as investors, we want to wait for that, and so we could pick up these things on the cheap. Is there the top 2, top 3 ETFs or stocks that you're waiting to drop and that you'll back up the truck and load up?
I mean, I'm a big believer there could be a lot of value coming in the market. Like even Amazon, I think, is very cheap, even where it is now. But I think we all know the market can get irrational and push even these summits, something like Amazon down a lot further. Microsoft looks very cheap. So now I'm just watching across the board. I'm actually building a financial stock analysis software at the moment. So, so as I'm building that out, I'm trying to see what sort of unique ways you can, design my own method of finding, like you said, deep value opportunities that have a strong balance sheet and cash flow and all that. Like MicroStrategy worries me a lot. You guys spoke a lot about that. I mean, the fundamentals of that is quite weird and speculative. So I think if you can catch the trend and something like that, you can do great. As we know, I think it was 2009, Bitcoin was $7,000. And look where it went to. So yeah, no. So I'm just watching broadly across the market, but yeah, there are names that are nervous for me, but like Iron did great. I was watching Iron.
Yeah, Iran. Yeah, the
Iran,
they're a data center, right? Data center play, if I remember correctly.
Yeah, data center plays, and yeah, they got to deal with Microsoft to sell their data centers from Texas, or the usage of their space. But a lot of those companies went parabolic. Even like you looked at CoreWeave. Did you say you had CoreWeave?
I have it in my hypothetical portfolio. I don't really have a position in it.
Okay.
But yeah, Iran stock has been, for those who are uninitiated, Iran had a crazy run up, like holy hell, 1,000%, insane. And they have a huge community behind them. Iran does.
They seem like quite a solid company if you look at the fundamentals.
Mm-hmm. So I have never looked at this.
It just would have been good to buy it a while back, for sure. Not that easy to buy it now, I don't think. But
no, this is scary. Like I'd be scared to open a position in something like this, and especially right now. But yeah, I've seen Iran mentioned a lot.
What's the other big data center company.
There's CoreWeave. There's I think Nebius. Keeps getting mentioned. Yeah, Nebius is Australian, and they're building stuff in I think in Europe. So they're going to be like
Are they
the
also
CoreWeave.
Australian? Because Iron is Australian leadership.
Oh, maybe it was Iran.
Okay.
I forget. Like I lose track of all these. Oh no. So Nebius is headquartered in Amsterdam.
Because they say that Nebius is more diversified.
Okay.
But I mean, maybe it looks like it's still quite high as well. So, yeah, I know. So all very interesting companies. And then you got the IPOs coming up with, is it X or was it X IPO or was it SpaceX?
Yeah, SpaceX IPO. Yeah, with the data centers in space.
Yeah, well, that's what they're planning down the road, I guess. But
if anyone could do it, Elon Musk can do it. If it's anybody, it's going to be Elon Musk. But I mean, I can't deal with the Elon factor. Like, I can't even hold Tesla just because of how wild it swings.
Yeah, sure. So, what would be your top 5 stocks for the next 4 years, if you had to just throw it out there?
Nvidia, Palantir, Robinhood, and BM&R and MicroStrategy. Those are my top 5 convictions. And I know they're all beaten down right now. But I think like if you look at Palantir's earnings, I mean they crushed their earnings. Nvidia crushed their earnings. And you can't have artificial intelligence without Nvidia. Palantir, they found the secret sauce of orchestrating all of these different LLMs for their software, right? That's the power of Palantir. They're getting mass adopted commercially. I mean, the tailwinds are all there for Palantir, Nvidia as well. For Robinhood, I've covered them multiple times. They have a lot of financial products coming out. Just in the last year, right? They have mortgages, they have banking, credit card. They're doing taxes and trusts. And of course, they have their brokerage, they have the crypto, they introduced the prediction markets. I mean, there's so much going for Robinhood. They're trying to become like the super app for financial apps, and I think they have an edge over everybody else. They're also going to be, the big holder of these, quote unquote, the Trump accounts. They're going to be a big holder of that, so that's a ton of AUM, and they have Robinhood Ventures, RVI IPOing soon. That's a big deal, right? They're going to make money off the fees from that, so that'll be accretive for Robinhood holders. So and then BM&R, of course, Ethereum super cycle, and then MSTR is just Bitcoin, right? Just waiting for Bitcoin. Those are my top 5 convictions. Very high beta, of course, very wild swings, but I'm just waiting for the thesis to catch up. That's it. I'm just waiting for the thesis to catch up, and then for price to reflect. Last year I bought Ondas. I still like Ondas. Actually, they secured.
Never heard of that.
Ondas is a drone stock company. They were a penny stock in 2024, and then they rose to like $14. But Ondas, they have counter drone technology.
Okay, I got you. Sure. So that's come back a little bit. So depending on what the future earnings potential is, that could be a buy. Okay.
Yeah, absolutely. ONS, they just had I think $1 billion offering. I forget what the details of that offering was, but they've been securing lots of contracts with not only the U.S. government but also governments overseas. Because like I was mentioning earlier in the stream, how someone could strap a stack of C4 onto a drone and run it into someone. What makes Ondas so attractive is a counter drone tech, where they can have drones that will see an incoming drone, identify it, and go up and catch it, throw a net on it, and it comes down, right? But they also partnered with they also went on an acquisition spree in at the end of 2025 and into 2026. Now they have ground robotics. They have other type of offensive weaponry that they're partnering with. So I think Ondas has some room to grow.
That's interesting because, sorry to interrupt, like Walmart, at our local Walmart here in Woodstock, Georgia, they've just put up cages with drones inside to start drone delivery. I haven't seen them flying around yet, really. But that makes me think of this company. You may need some protection if you're flying your drones around, even to deliver.
And imagine, like, it's not just, imagine the Olympics, right? My background is like military.
No, I agree with you. I hear you exactly with the technology, AI, everything. So all these companies in this space. So thanks for mentioning this one. Appreciate it. Yeah, to me, NVIDIA looks potentially huge opportunity because I'm sure they're going to diversify away from hardware, and they're generating such profit every quarter and such cash flow, and they got no debt. So someone's pushing NVIDIA down, in my opinion. So for a long-term hold, I mean, it is high, but you got to look at it versus its forward PE. And it's, and its balance sheet and everything else. So, I mean, I don't know. Maybe it could come back down to, 150? But who knows if it'll get there. It's a tough market for sure.
Yeah.
But there's rotation at the moment. They're rotating out of technology and they're rotating into, I mean, I won't show my dashboard, but, there's rotation at the moment, which we all know about. So it's just about a patient game, I'm sure. As you know, after doing this for so long, trying to be patient and pick up quality opportunities. So how did you create your community, like doing YouTube? Just by putting it up regularly and stuff?
Yeah, so like I started last year, just started doing YouTube videos, general finance, and then the one video that took off for me that kind of set me on this road was a video called Yield Max No Nav Erosion, right? I was wrong. I read the prospectus. I thought that, their strategy changes were going to actually impact the ETF in a positive way, but it didn't. Jay Petrocelli came on the show on someone else's channel and basically mentioned, like, no, this is not going to be favorable for the stock price or ETF price. So anyways, I got my start there, and that was right around the time I started really getting into high yield products, high yield ETFs. And it is a fascinating space. And I got to watch it firsthand kind of evolve from what it was, right? You had, the QYLD, XYLD from Global X. Those were the OG, ETFs. And then you had the Yield Max single stock cover call ETFs, capped upside, full downside capture, right? Then you had the LT fiasco, and then, you had all these funds coming out with cover calls and then swap agreements, and then, like 100 different strategies all wrapped in a single ETF. Then you had like income boosting strategies like Granite shares. You had all this stuff happening.
The Granite share high cash yield one for me is done. I'm happy with. I'm getting 10% per year on that, which I'm sure a lot of your viewers are not happy with that, but I was happy with my 10%. Because it managed to get 10%. I had no NAV erosion and it's paying me out 10%. So I'm in and out a lot. So, but what is that, hippie or hips or something? Yeah. I'm telling all the boring stuff, so everyone's leaving the call.
let me ask you a question, because you're the first person I know of that's publicly said you're investing in Granite. It's like something nobody really says publicly.
Really?
But do you do your own like cover calls by any chance? Do you do your own cover calls or anything like that?
Not at the moment, no. I did a lot of options 15 years ago for like 5 years. And all I could say, for me, I'm not a good option investor. I would sell options to make money, and then the stock would blow out. I mean, you understand, Murphy's Law will happen. So what is that one that shot to the moon about 8 years ago or something?
Oh, GameStop.
Yeah, so I sold calls in GameStop. And then it just shot through the roof, and you end up with such a huge loss. So your risk reward ratio, I don't know how the guys do it.
Yeah,
like Neos does it on an ETF, so that I think maybe that's the way to do it. But you still got that risk. You understand? You got that outlier risk and I've lived it. I've seen it a few times because you think in theory it'll never happen, and then it happens, like with GameStop. So. Yeah, so I mean, I think I lost $20,000 in just 3 days.
Yeah, I lost a lot of money on GameStop too. I think I was up to like almost 10 grand. For you as an investor in Granite shares, tell me like your perspective, like why do you invest in something like a Granite shares, cover call ETF income boosting versus just doing your own cover calls? Like I know you kind of touched on it a little bit, but I just like to hear people's thought process behind all of this, because I'm pretty sure we all think the same thing and we all have kind of the same feeling of why we invest in high yield products. But I think it's an interesting discussion nonetheless. So do you have any reasons why you would rather, outsource to an ETF versus do your own calls?
Yeah, I'm trusting their expertise to manage, so but I mean, some of the high yield Granite shares I just dabbled in, and then I didn't like the action, and I'm going to add it to my application that I'm building. I'm going to add a feature that does a comparison, so it'll automatically compare all these high yield ETFs and compare how they behave in reaction to the underlying, and Granite shares behaves the worst. If AMD goes up or AMD goes down, it'll lose on both sides, in my opinion. And I mean, it is what it is. I've got the data, I've done the analysis, but the only Granite shares I end up sticking with just for a short while was, as I said, the HIPs, where I want to get higher than treasury yield in my cash,
Yeah, gotcha.
Yeah.
I think that's always an interesting discussion. Whenever high yield ETFs come into the conversation, like why would
I got the
someone
wheel?
choose?
Someone just mentioned that. I do have a little bit of the wheel. There's a wheel. I don't know exactly how they do it, but the wheel option ETF.
Oh yeah, the wheel ETF.
Yeah,
we have
maybe
Skeptic
look for
in the
it.
channel.
I mean, I listened to all those YouTube from the owner and all that, and I've got a little bit in that, so I'm watching that, and it's been fairly stable, so it's been quite good. But for me, with these, you got to look at the historical movement and this and that, and try and time it a little bit. You got to be patient. You got to try and time it. I mean, for me, you know what I mean? You got to time it a little bit so you reduce your risk. If you buy it at the high, you're overpaying. So sometimes you got to leave some of them and not go there. But yeah, no, I do have a little bit in wheel as well. So yeah, I'm trying to outsource it to the experts because I did it for many years, and I'd always say options were death by 1,000 cuts.
That's awesome. Death by 1,000 cuts, 1,000 red points.
Because the market makers are against you, these large institutions. So I don't know. That's for me, like, I'm trying to beat the treasury yield with some of these high yield ones, but that's why I'm a big fan of NEOS. That's one I like the most because they don't overpromise, and somehow they seem to be quite incredibly good at coping. And most of theirs recovered from the tariff dip. I think they're one of the only ETFs that give a reasonable yield. They don't give super high, but they managed to recover from that dip. So
yeah,
they seem to have quite a phenomenal methodology. And then I thought Curve would be interesting, but I don't know. I have to watch them. The guy seems very knowledgeable and very experienced who owns that business, Howard. But
yeah, Howard's been he's been making some waves lately. I mean, last year nobody looked at Curve. Of course, nobody looked at Curve. Everyone was looking at the higher yielding stuff, the faster money accumulation, things like that. But Curve ETFs have always been good. They've always appreciated compared to like the yield solid counterparts.
So I just got unlucky going into the high yield one and getting killed.
Oh, don't be too hard on yourself.
Yeah.
I got in on high yield as we were heading into Liberation Day. So
yeah,
I got to feel all of that. Like it was February 18th. I remember this date because that's when I bought I bought XDT XPay those days. And then I added NVDW and PLTW later. And then I got to see them just magnificent, just blow up. Just blow up as Liberation Day had happened. So,
in a market that's going in a strong market, a lot of these high yield, can do all right. It looks like, but in a crashing market, they look like they're difficult.
Yeah. Yep. So Latro says, my first dance with options, I ended up looking like Wile E. Coyote exiting the TNT shed. Now he's been doing well. Yeah, it takes some learning. I tried to dabble in options myself. I'm still like super novice.
But maybe a question then for everyone out there. I mean, so if they're selling calls or they're selling puts, well, let's say they're selling call options. Do they hold 100 units of the underlying? So you balanced.
Yeah.
Because if you don't, and it does blow up like GameStop, So I mean, that's just the risk sitting out there for you. You can make money every week. You make 20,000 for the year, then GameStop comes along and it blows you out.
Yep.
So
sizing and position is everything that I've learned. But Mike, I appreciate you coming on the show, my brother. I have to get going.
Nice chatting with you. I'll let you go.
Absolutely. To the audience, I appreciate you guys joining in on this stream and listening to the news sources and then our conversation here with Mike. Mike, I do appreciate you coming on the show. But with that being said, you guys have a great weekend, a great rest of your night wherever you are in the world, and we'll probably be doing a Sunday chill session. So I'll probably be doing a live stream from there or on that day. So hope to see you guys in the next live stream. And with that, you guys take care. All right. And Mike, thanks again for joining.
No, thanks for the great information. Have a good one.
You too.
Bye-bye.